Hello traders, welcome to your daily market update for Monday the 1st of June. We are starting another month and what has been following on from a very positive US dollar last month, and we will continue to see the focus on the US dollar as the market really starts to evaluate how close we are to getting a rate rise. Right now the expectation is starting to point towards September, and we are getting clues from the Fed throughout every single week to suggest that we will get a rate rise. But closer to this week, we are going to start to consider whether Australia will be looking to cut interest rates after what has been a series of weaker data that is starting to point to suggestions, and the market is starting to price in anticipation a potential another 0.25% interest rate cut. So as you can see, we have already started off this week with some weak Australian data with building permits down, and we will move into HSBC manufacturing, and that has remained flat, but it's still in contractionary territory, which is also not real good for the Australian economy. And moving into this week, we have a vast range of data. It's going to be quite an exciting week full of data, so we need to keep on top of it. Kickstarting the European session, we have manufacturing PMI and CPI coming out for Europe. We have manufacturing PMI also out for the pound. And in the US session, we move into some CPI for consumer consumption, personal income, and we move into some manufacturing for the Canadian economy, and we will close off the day with some ISM figures. So we do have a lot of data. It's going to really move around the price action, and then following on from that, we do have the RBA rate statement. It says here the expectation is expected to remain at 2%, but I believe that the market is really looking towards a potential rate cut. So we'll see what happens, and the market reaction will tell us exactly whether it's met expectations or not. If we do get an interest rate cut and the market should sell off the Australian dollar further, and we'll keep an eye on some key support levels. It's definitely a rate decision worth watching, so for those of you who are able to watch the market, the Australian dollar is definitely in play. Let's go and have a look at the US dollar index, and as you can see, we did start to come off a little bit on Friday. So the market has started looking at taking profits. We didn't get a big upside reaction as a result of Friday's news, but as you can see, we are trading a little bit high, but really still just flat opening up the week. It's going to be interesting to see whether we actually do get a little bit of a pullback on the US dollar, or whether we just continue to grind higher on the back of the momentum that has really been followed by the media and all traders in the turn of recent trading sessions as a result of Janet Yellen suggesting that they are going to raise rates this year, and the opportunity for them to do so is reducing month by month, meaning that we are getting closer to her words potentially coming true. And if that's the case, the US dollar strength should be the continuing story. Of course, Greece still plagues the market, and that's going to continue to weigh pressure on the euro. But of course, if a deal is struck, we could get a relief rally bounce. So we need to be poised for that potential circumstances to come to fruition. We are at the 12th hour, and anything can happen. All right, so let's have a look at the New Zealand dollar versus the US, and as you can see, it's broken through some major monthly lows, and February and March lows have been penetrated quite deeply, and we could get a slight pullback, and then the market momentum could kick back in and push the New Zealand dollar lower. It has been a pretty big fall, so be careful of pullbacks. For those of you who want to ride the gravy train, we can't continue to fall in a straight line, and there is potential circumstances for a bounce. If we don't get an interest rate cut tomorrow from the RBA, New Zealand could actually take leads from that and also initiate a bounce. I'm looking at historical support levels to potentially become resistance in the first instance. So keep an eye on 71.8 cents, as that might be the next resistance level. Momentum is still to the downside, and you can't really argue that at this point. Australian dollars had significant falls as well, but it hasn't taken out the monthly lows of April, March, and I think that an interest rate cut could definitely send it below 75.5 cents in coming sessions. However, if the RBA fails to deliver a rate cut, we could actually have a little bit of a bounce, and that could offer up some support, potentially in the short term, in my opinion, as I think that the minute statement can't really be positive for the Australian economy. They don't really have any reason, and they don't have any data to support a positive tune. So any bounce should be somewhat capped, and we may be looking at historical support over here, becoming the next resistance level at just under 78 cents. Moving to the Great British Pound, the Great British Pound has come off here on the daily chart, as you can see, but the falls have stalled, and we could be looking for a short-term support if the US dollar does manage to have a little bit of a pullback. But I think that we need to keep in mind the longer-term trend. We have been seeing high swing highs, high swing lows. We are still technically in an uptrend. So this is a very key point for the pound, and the US dollar will either help push this lower or help create a bounce. If we do get a bounce, I'll be looking at levels of previous resistance over in here, potentially becoming resistance again before we fall away if momentum does pick up once again for the US dollar and the Brexit fears continue to haunt the market. We need to keep an eye on it, but any moves below the recent lows would definitely, which is just above $1.52, could definitely open up some further moves to the downside. The euro, if I have a look here at the euro, we did have a bounce last week. It did come up and test the 110 on Friday. $1.10, $1.10.5 is a very key resistance zone, and I'm really interested to see how the market reacts off the back of that. For now, we have trading a little bit lower, but it is early on a Monday Asian session, so we've still got a lot of market to play out, and we do have a lot of data, as I've mentioned. So keep an eye on $1.10, $1.10.50. That is a resistance zone, and if the market does reject that area, we are looking for some lower price moves. But for now, I'm cautiously sitting and waiting. The US dollar versus the Canadian dollar stalled twice on Friday. We did have some additional drawdowns on the oil stock exchange, and that did boost oil. Oil did have a bounce, and it did create a little bit of pressure on this pair, and also the US dollar not continuing its rally after the data on Friday. It was quite a subdued meeting. So we somewhat have two tweezer top pairs here potentially offering resistance, and this could be a signal for some lower moves. We need to get some more confirmation on shorter time frames before we jump onto that. However, of course, if we do break above these tweezer tops here, it's going to open up prices up to the next major levels around the 127 area. US dollar versus Japanese yen has had a phenomenal rally. We still haven't closed above the 15-year highs. We have tested it and we did fade back below. We had another run towards it on Friday, but it did fail. So it is showing that we have seen some significant resistance around the 124, 200-ish range, and that is offering up 15-year resistance. The market's reluctant to close above it. That could also be a sign that the US dollar is ready to have a little bit of a pullback before we do stage another run towards that level. So be careful of that and look for some shorter time frames. Well, that's it from me today. It is Monday. It's the start of another trading week. All traders should be in a good mood. And it's going to be an exciting week, as I mentioned. Don't forget the RBA interest rate decision. Keep an eye on price action, and we need to wait on some shorter time frames for some indications of exactly where the market wants to head or start heading this week. So as always, traders, I'll be back again tomorrow, and until then, trade well.